What we see from the money flowing out of the GCC during 2013, about 68% of it was headed towards the UK, and of which about 80% of that money was headed towards London specifically. And the reason we think that is partly familiarity, that most of the investment institutions that are flowing money out of here already have investments in London. The people of the GCC are very familiar with traveling to the UK on a regular basis. But the key aspects are the availability and the performance of London stock at the moment, and probably the number one component, the liquidity. So as the investors come into the market, planning their exit at the day they enter that investment is very easy in London. So it's a very fluid, a very liquid market, and that's, in talking to the investors from this part of that is the key aspect of why London continues to be the number one hotspot for investment globally. Insofar as the sovereigns are concerned, part of their constitution means that they're not permitted to invest within the GCC or the MENA region. For the family offices that are investing, they already have a very significant pool of investments here. So UK and Europe and the US in particular, they're all about diversification of investment going forward. And I think that diversification, as the markets of this region recover, is going to get more acute because there's bounce back in value amongst the developments or the investments that that group of people have here already. So our expectation at CBRE is that there's going to be a greater flow of capital going out to the external markets from here than be invested here. What that of course gives is a big opportunity for foreign investors, investors who are not origined in the GCC, bringing money into this region. It's going to take time for this investment capital to find opportunities here. I think it's fair to say that the majority of the money which is focused on this market, particularly the Dubai market at the moment, is a little frustrated because of the lack of assets available here in this marketplace. We think the government has a big opportunity, a big role to play in producing more liquidity in this market because the governments of the Middle East tend traditionally to occupy a lot of the stock here. For instance, the government of Dubai, we think, occupies about 20% of all stock here. If they were able to sell even through indirect routes or sell and leaseback consideration or head lease interest that they could bring to the marketplace, we think that would stimulate a significant capital market here.
So traditionally when we were talking to buyers in the recent past, people would say to us, I'd like to buy in Mayfair, Belgravia, Knightsbridge. I want to be within walking distance of Harrods, and you can understand why. But that trend is definitely changing. We're seeing more and more inquiries for places such as Fitzrovia, along the South Bank. And I think it's partly because some of the new generation Middle East clients are looking for areas of opportunity outside the super prime. Super prime, of course, will continue to be attractive, but I think because London is changing, and obviously you have sort of some regeneration areas, the South Bank I think is very, very interesting in its own right, that some of our new customers, our new clients are saying, tell us about what's happening in Nine Elms or in Wapping or in Greenwich, by way of example. There's no doubt if you look at obviously our prediction in terms of house price increase, and obviously we've published our report recently which covers that in detail, but there is still an imbalance. There is a lack of stock compared to obviously the demand, and the demand is still very strong, whether it's from here in the region or outside of obviously the region. But actually more and more people are looking at those sort of further areas outside the core centre. As I said earlier, not just the traditional heartland of Mayfair, Belgravia, Knightsbridge. So we're talking to our customers, our buyers, about other areas of London. We've had other projects in, for example, we had a scheme recently in Acton, which was proved very, very popular because it's close to the Crossrail link at Acton and close to Heathrow. And I think the infrastructure changes in London, Crossrail by one example, is going to make a significant difference to people's decision-making process about where they want to buy in London.
Yes, they're typically large funds, sovereign wealth funds, and they're looking for large-scale deployment of capital into what is a relatively safe haven in London and the UK. So these investors are well educated in our market. They understand residential as an investment class, and they've typically invested around the world in America, but they understand now that there is an opportunity to invest at scale in the UK. So they're looking for large blocks of residential, which you can't really find as up and let income producing stock, because we haven't produced that in the UK for many years. So they know that you have to develop to invest, and they're good and they're used to doing that, to invest, and through that it's an opportunity to get an improved return on their money. They take a bit of risk, they understand the product, they understand the risk side of it, and to that end, they're really very interested in investing in not just London, but also other areas of the UK.
The Middle East has been an important capital source in the Americas for a number of generations. There has been a massing of capital, and now that capital from the Middle East is starting to migrate not just into traditional places like Paris and London, but also into the United States. And it's moving in a variety of directions, mostly around new development, around the residential, luxury residential space, as well as making key investment decisions in commercial properties in places like Manhattan. We are starting to see some tertiary, what I would say not tertiary in the sense of their relative size, but we are seeing more interest in the other U.S. gateway cities, places like, you mentioned Washington, D.C., Boston, Chicago, Los Angeles, San Diego, to a lesser extent, but certainly Seattle, and places like Denver and Houston. Well, the U.S. has always been among the places that global capital flows to. It flows to the United States and the Americas for a variety of reasons. The relative stability and growth of our economy, the rule of law, the level of transparency in the marketplace, and the fact that it is a secure and stable government. Now, that capital continues to flow from many regions around the world. What has been most noteworthy in the last 18 to 24 months is the dramatic flow of capital out of Asia generally and China, the People's Republic of China specifically. And the difference in that type of movement is the Chinese capital has not been only investing in fixed existing assets, but they are also very ambitious about new development projects in major gateway cities such as Los Angeles, San Francisco, Toronto, New York, and Boston.